Hey, good morning all. CamelbackTrading.org coming to you this Saturday morning, May 15th, and we're looking at WinDOTRADER's market profile of the three indices we follow. We'll go over what transpired yesterday, and then we'll break down all the charts from top down. So we went out Thursday with an inside day, and we said when you come out of the inside day, one way or the other, you go with it and you monitor it for continuation or lack of. Well, all three of these indices came out of the inside day to the upside. SPY with a strong opening drive gap that held all day. The other two did not have gaps that held, but they had inside days up that held beautifully. The only time that the opening was seen in any of these was barely in B period in triple Qs. I didn't do any trading in triple Q or Russell. I did my trading in SPY. You would think when you sit here and look at a day like yesterday, you say, wow, how easy it was to have just been long all day. Especially when you said, hey, you go with an inside day, you go with it and monitor it for continuation, and boy, did we have that. Yet I had an okay day at best. I find myself in these grinds, tough to get long, looking for pullbacks that never came. Especially, we were grinding inside a large gap. And I said to the room, I don't think it'll get filled that easily. And I said I wouldn't be surprised if they play their games and either fill it or come close to filling it, and then that's it. And that's basically what they did. We didn't even fill the gap, just missed filling it, pulled back finally a little bit in M period, but not much at all. So an okay trading day. Again, it looks like the type of day, once C period has that reversal bar and goes above B, get long, sit back, and just watch it. Unfortunately, I'm not built that way. Again, you have to know yourself best. So, again, an okay day, but not one that should have saw some much more fruitful outcomes. Anyway, as far as my trades, again, I did take a long in B period. I took the long in B period with the one-time framing up. I was telling the room, again, I told you I can see the day and call the day. Executing it at times is another thing when you're not built to trade these kind of grinds. I said buyers had everything going for them. We had higher value. We had a gap higher, inside day up, one-time framing up, single prints. I said you could just check off all the boxes. It was like the Michael Jordan of trading on yesterday. So I said, well, the good thing is there were times in the past where not only didn't I get on board the long, but I would fight this with the slow grind, saying it can't go high, it can't go higher. And again, at least I didn't do that. It's the money you keep, not the money you make. Because I'm sure there's a lot of people out there that attempted to fade this, to fight it. And again, the train going 10 miles an hour is going to kill you, as well as a train going 100 miles an hour. Look at all the volume. Now I'm in 5-tick increments. Look at all the volume. It's all done at the upper end. Buyers did not get they didn't get shaken out at all. At all. C period, not one time frame down. Took out B's high after they one time framed up, came into balance for 2 seconds, and then just grinded up the whole day, and we spent the entire afternoon up here. L period. Actually took a short on the break of K, thinking, well, maybe we'll finally shake some longs out. Never happened. And then M finally filled one set of single prints. But again, buyers, there was no inventory adjustment at all yesterday, and buyers were not phased whatsoever all day. So I did take the long in B period, did well on that. I actually shorted E against the 20-day moving average. I'm like, maybe we bumped our head against it. Maybe we'll stop a little bit, made pennies on that. Again, I did very few trades, a couple of small shorts at areas that I thought could get a pullback. Didn't get hurt by any of them. Actually made money on all of them, but very small. I took a short in F period. I said there was no tempo at the time. The 418s, again, pulled back just a little bit, but The thing is, instead of looking for the short, any pullback should have been looking for longs against the one-time framing. That was the best trade. Out if you stop one-time framing. Other than that, you shouldn't have done anything. And then the only other trade I took was an L. When we finally took out K's low, I'm like, well, we should fill this set of single prints. Now, I don't believe ES even went out with a set of single prints. We have two small ones in SPY. G and F, they are very small. So when L came down, I'm like, all right, we should fill J, and then we'll see what happens down around G's high. Never got there. Made pennies on it, started going back up, took the rest off. So again, not a great P&L day, but I'm not upset at that considering just stayed away from it, and it's only one day of trading, right? So destinations for Monday. So for the upside, we have Friday's high of 417.49, and then still filling that gap at 417.81. It's down to 32 ticks. It was 254 points when the day started. Above that, we have the price probe for May 10th at 418.74. So here's the gap fill, and then here's your price probe. Now let's not forget, we also had the double distribution day still on the 10th. That still has to be dealt with. Single prints 419.89 to 421.03. That's a rather large set. So again, we'll be interested on Monday if they continue this grind up, what happens inside of there. Actually, triple Qs got inside of those single prints on Friday, but did not close them. And then above that, we have 422.74 weekly high, 422.82 monthly high, all-time high, and 423.21 pre-market all-time high. For the downside, SPY has two sets of single prints. First set starts at 416.06, get filled at 02. It's only 4 cents. Second set, 415.77, get filled at 75, 3 cents. Then we have yesterday's low of 413.18 and then filling the gap at 412.35, an 83-point gap from yesterday. 412.02. The price probe from the 13th. So remember how important this was. Remember we probed on the 13th, but we closed all the way down here? I said we do not know if it's accepted or rejected until the next day. Boy, was it accepted. We gapped higher and never looked back. Below that, we have 410.82, which was 9 wide on the 13th. It was going to be an upside destination. It's now a downside destination. And we'll stop there for now. So let's go to the charts now and break down all three of these indices from top down. We'll start with the Russell. And there's a lot of interesting things going on with all of these. So here's the Russell. The monthly is very interesting right now. We finally came out of an inside month to the downside, and all week sellers pushed below last month's low. It's pretty bearish, but all week buyers fought back, and now we closed just about $6 back into it. Now there's still 2 weeks to go in this month, so a lot can happen. Sellers could finally take control below there, or on the flip side, if that's all the sellers wanted to do, we can go and test last month's high. Now, if by some chance, this is where we have to put all the options on the table. If by some chance we close above last month's high, that would be an outside month up. So after 7 months of one-time framing up, sellers finally had a chance to take out an inside month to the downside. If that's all they did, well, that's not much. So they either have to get on the ball sooner rather than later to get back below last month's low to go test that level I keep talking about, the 205, 207 level. Because if not, you're either going to close inside of last month and its balance, or possibly, if this thing gets legs again and closes above last month's high, have an outside month up. So that's something bears very, very important watching. Here's the weekly. Firmly in balance, right? We've been inside of March 22nd's week for the last 7 weeks. That's all we've done. It's a firm 8-week balance. It went down, came back into balance. We came out of an inside month to the upside. They attempted to try to go high and nothing really happened. So basically, they poked their head above that 228.10 level back on the week of April 26th, but closed back in it, and that's all we've been. Firmly balanced. So the balance high is 230.95. That's last month's high. And the low is 208.03. It's a pretty big balance, but until you come out of that, nothing's changed. And on the daily, after one time framing down for 4 days, we had an inside day. We all had inside days yesterday. We come out of it to the upside. I'm still going to call this a 4-day balance. Now buyers, for me, buyers should need to take out Friday's high. If they do, the daily would be up. If not, we'll stay in the balance. So monthly is balance with an inside month down, which has failed. Weekly's balance, daily balance. The Russell's looking for more market-generated information. Triple Qs. Monthly has been in balance. We're in a 5-month balance. So again, that's a market waiting for more information. Since we've been at highs or close to the all-time highs, when you get into these balances, the question becomes, is the market just pausing, shaking out some weak longs in these balances, and then they get new reinforcements, and now we make higher highs? Or are the buyers finally giving up and we're going to roll over? So balance and excess, two biggest parts of trading. So as you can see right now, Russell's totally balanced. Triple Q so far monthly's balance. Now weekly, I'm calling the weekly down. They came out of a 3-week balance 2 weeks ago to the downside, and it's continuing down. So the weekly is down for me in the triple Qs. How does that stop? Have to take out last week's high. If we do that, we come back into balance. But for now, it's down. And if it continues down, I would look around the 311, 312 area as your next destination on the downside. So monthly balance, weekly down. And the daily, just like Russell, putting it in a 4-day balance. Came out of an inside day to the upside. That's impressive. But I'm still going to call it balance as they closed right at their 50-day moving average. Literally 13 cents below it. So again, if they take out Friday's high, the daily at least turns to up. If not, it stays in balance. And now for SPY and the ES, because they're the same right now. We're in better shape than all of them. For the simple fact is the monthly still one time framing up. 7 months, including this month. Pretty impressive. Weekly. Now, things get a little dicey here. Now, trading is an art, right? It's not a science. Balance areas aren't exact. Some people are going to look at things differently. I had a discussion with my friend last night. I asked him what does he think about the weekly and daily. He has the weekly in balance. I said the problem I have with calling the weekly in balance is when we talk about balance rules, you slightly stretch a balance and come back into it. Now, to me, we didn't just slightly stretch it. We went below the 4-week, 5-week balance by over $5. Yes, we closed firmly back inside of it. So if we had just taken out the week of the 12th low by 50 cents, $1, I could say, okay, we just stretched it and we're balanced. But to me, that was a little more. So I'm calling this, for me, down to balance. This way, we'll see what happens. Do we have an inside week? Do we come out of it? Look, if we take out last week's high, we'll firmly be in balance and or start turning up if we get acceptance above the all-time high. So again, it's all visual. You can call it balance. You could call it down to balance, whatever you like. That's how I'm looking at it right now. And the daily, again, for me, it's the same as the other two indices. I asked him, what is he calling the daily? And he said he's not sure if he wants to call it balance or up because of the gap. I said, well, I'm calling it balance to up. So just like the weekly, I have balance to down. I'm giving the sellers the benefit of the doubt. I'll give the buyers the benefit of the doubt on the daily, balance to up since we held our gap. And to me, it's a 4-day balance. Friday's high is the top of it. Wednesday's low is the bottom of it. That's a fairly big balance, right? Rounded out, 405 to 418. It's a $13 range. We came about $13 off the low from Wednesday's low. So that's basically how I'm looking at it. We closed above the 20. We never really tested the 50, got close to it. I really thought we had a chance of testing the 50 after Wednesday. Obviously, the sellers just walked away. Buyers took firm control as we have an open and drive Thursday, straight up inside day, open and drive up Friday, straight up gap held. That's pretty positive. So based on those 2 days action, you would think, even if we get a little consolidation on Monday, the next move should be to take out Monday's high at some point, or Tuesday's high if we have an inside day, and then go for that double distribution day from the 10th. So there's your breakdown. It's a good week in the trading room. Not the easiest week to trade Thursday or yesterday, for me anyway. Right? We put it out there, put it out there on the table. Reading the market is one thing. It's a skill I think I have pretty good. Executing it at times, knowing myself. If I'm not comfortable with the markets doing or not doing, I either trade small or stay away from it. I hope you all had a great week. Enjoy your weekend, and we'll speak prior to the opening on Monday.